So, you've had that light bulb moment, a breakthrough, an idea, a piece of code, maybe a patent that you know could really change things. But here's the thing, there's this huge gap between that brilliant idea and actually getting it funded. In this explainer, we're going to break down the real rules for crossing that gap, using these slides to guide us. It really does seem simple, doesn't it? Build something amazing and the money will just show up. But just like playing the stock market, knowing the basic rules and actually winning the game, well, they're two totally different things. The reality of raising money is way, way more complicated than it looks from the outside. And that leads us right into the first big myth we've got to bust. Honestly, it's a pretty dangerous one, too. It's this belief that your intellectual property, your IP, is some kind of golden ticket to getting funded. I mean, just think about it for a second. If you've created some truly revolutionary technology, its value should be obvious, right? It's got to be worth millions, maybe billions? It feels like a simple question. But if you ask an investor, the answer is anything but simple. Okay, this slide really frames the problem perfectly with something called the collateral test. Let's pretend you're a bank for a minute. Someone comes to you for a loan, and they offer one of these three things as collateral. The stock, that's a no-brainer. It's liquid, you can sell it for cash pretty much instantly at a price everyone agrees on. The apartment, it's okay. It's less liquid, right? It takes time and a lot of effort to sell. But the patent? From the bank's point of view, that is a massive gamble. There's no quick way to turn it into cash, and there's no standard way to even agree on what it's worth in the first place. And that's the core of the problem. And right there, that's the big disconnect. While you see this thing of absolute brilliance, an investor just sees risk. They think in terms of assets that are standard, that are predictable. And your raw patent, it's the exact opposite of that. It's a completely unpredictable bet. So, this is where a lot of founders get a pretty harsh awakening. The value that you see in your technology isn't what an investor sees. But hold on, that doesn't mean it has no value. It just means the value is coming from somewhere else entirely. And this line, this just cuts right to the heart of it. Your patent, that brilliant algorithm you wrote, it's not money. It's a tool. And the only thing an investor really cares about is what that tool can actually build out in the real world. So this is where the whole value equation flips on its head. Your IP is only as valuable as the actual money it can generate when you apply it to a specific problem in a specific market. See, it's not about the tech itself, it's all about the revenue stream that the tech creates. And this slide? Oh, this slide perfectly illustrates that classic tug of war that happens in every single negotiation. The investor, they're pulling you toward the cost method. What did it cost you to build this? For them, it's a nice, low, safe number. But you, the founder, you're pulling with all your might toward the income method. Look at its massive future earnings. You're both pulling on the same rope, but you're looking at it from completely different ends. Okay, so once you really understand this conflict, it helps you choose the right path and, more importantly, speak the right language. Are you going to a bank for a loan, or are you going to a venture capitalist for an investment? Because believe me, they are two completely different worlds. Let's break this down because it's super important. Banks are in the risk management business. They look backwards at your past. They want to see your existing, predictable cash flow to make sure you can pay them back. Their money is cheap, but they absolutely hate uncertainty. Investors, though, they are buying a piece of your future. They could care less about your past cash flow. They care about your story, your vision, and your potential for insane, explosive growth. And this timeline really shows a fundamental paradox. Just look at the startup phase over on the left. This is where you're at peak innovation, right? But it's the absolute hardest time to get funding because you have no history. All you can sell is a compelling story. It's only way later, when you hit the mature phase on the right, often when the really radical innovation is kind of slowed down, that you finally have the stable cash flow that banks are comfortable with. So if you're in that early, super innovative stage and you're looking for equity, what does that mean for you? It means your most important job isn't being a scientist or an engineer. It's being a storyteller. So you're not selling a product that exists today. You are marketing a vision of what the world is going to look like tomorrow because of what you've built. Your pitch deck, that's the script for the movie about that future. And you need to be the screenwriter who makes an investor believe in that future so much that they feel like they have to be a part of it. All right, so you've perfected your story about the future. But what if the most valuable part of that future is an asset you're not even talking about yet? And that brings us to the next frontier, the hidden value of your data.
You know, when we think about AI, we usually focus on the clever algorithms or the super powerful computer chips. But in reality, those are just two pieces of the puzzle. The third piece, and as this chart shows, the biggest and most important part, is the massive amount of data you need to train and fuel the whole system. And here's the bottom line. A brilliant algorithm without a ton of data is just, well, it's just artificial stupidity. Data is the fuel. It's what turns a clever engine into a vehicle that can actually change the world. This is the new battleground. And if you think this is all just some theory for the future, look at this number. This represents over 83 billion yuan. That's more than 11 billion US dollars in financing that was secured using data as the main asset in one country in 1 year. This isn't coming soon. It's happening right now. Data is officially a bankable asset.
So the crucial point here for every innovator, every founder, every researcher is this. As you build your technology, you are also building a data factory. The question isn't just about the value of your patent anymore. It's about the immense hidden value of the data it generates every single second. Have you started thinking about how to unlock it?